Ladies and gentlemen, I stand before you not just as an aficionado of the written word, but also as a humble student of the grand tapestry of investment wisdom. The book that has graced my reading table, and which we shall vivaciously dissect tonight, is none other than Investment Philosophies, Successful Investment Philosophies, and the Greatest Investors Who Made Them Work. This tome is the veritable treasure chest within which lies the secrets to the alchemy of turning mundane metals into financial gold. Well, almost. I shall now unravel with great fanfare and a hint of cunning wit the top 10 insights from this magnum opus on investing. Firstly, the magic of compound interest is not just a whimsy tale for mathematicians, but an elixir for the investors. The mantra expounded in the book is simple: start early, invest regularly, and time becomes your most loyal ally in the realm of compound gains. See, compound interest is like baking a magical cake, where every time you pop it into the oven, it gets exponentially bigger. Now, who wouldn't want a piece of that ever growing confectionery? Our second insight is the art of value investing, a philosophy embodied by the Grandmaster Warren Buffett himself. This concept entails the exhilarating hunt for businesses that are as undervalued as lost Rembrandts at a garage sale. You scour the marketplace, not for the lust of the bidding war, but for the serenity of intrinsic worth, looking for quality stocks at discounted prices, like bargain hunters at an estate sale with a nose for the exquisite, yet overlooked masterpiece. Moving on, the book caresses the contrarian thought, a delightful paradox where the investor dances to a rhythm opposite to the teeming crowd. It's like arriving at a costume party dressed in business casual. This insight suggests that one should buy when the world sells in despair and sell when the market is in euphoric disarray. The market pendulum swings between extreme optimism and profound pessimism, and the contrarian investor waltzes in, seizing the moment of imbalance. High-fiving the contrarian is the growth investing approach. Now, these are the Magellans of the stock seas, explorers betting on companies with the potential of conquering new worlds of revenue. Leaping onto these vessels, investors hope to ride the waves of a company's rapid expansions. But beware, for these journeys can be fraught with the sirens of overvaluation luring the unwary onto the rocks of financial ruin. Our fifth beacon is the zealous index investing. This philosophy shuns the siren calls of stock picking in favor of the humble reliability of mirroring the market. It's akin to trusting in the collective wisdom of the crowd, or rather, hitching a ride on the market's broad shoulders, enjoying the sights and sounds without the strain of the climb. Next, let's talk about divine arbitrage, the financial equivalent of being a cosmic juggler. The investor here looks for price discrepancies between markets, buying in one and selling in the other, exploiting the difference as profit. It's the art of spotting a deal on a Van Gogh in France and selling it at a New York auction house before anyone realizes it's the same painting. For our seventh insight, we revel in the halo of activist investing. This is not for the faint-hearted or the hermit investor. Activist investors dive into the arena, not just to observe, but to influence the coliseum of corporate governance. They nudge, they push, sometimes they shove, steering companies toward changes that unlock shareholder value. The eighth mystical rune from this book is market timing. Herein lies the pursuit of the holy grail of investment, to buy low and sell high at the precise tick of the clock's hand. It's a strategy more complex than a game of three-dimensional chess played in the dark. Legends tell of those who have mastered it, but for mere mortals, the timing beast remains as elusive as a shy unicorn in an enchanted forest. Our penultimate treasure is a relatively newer herald, the angelic environmental, social, and governance, ESG investing. This is the investment equivalent of donning a cape and striving for the triple crown of profit, people, and planet. ESG believers look beyond the ledger, assessing companies through the lens of long-term sustainability and ethical prowess. It's akin to choosing friends not only for their charm, but for their virtue. Lastly, we touch upon the strategic asset allocation philosophy. This is an investor's game of chess, played not with pieces, but with asset classes. The board is a portfolio, and the gambit lies in balancing the assets based on an individual's goals, risk appetite, and market movements. It's the art of maintaining equilibrium in a financial ecosystem as delicate as a house of cards on a breezy day. Now, having regaled you with these 10 sparkling jewels of insight, it's evident that the book is more than an exploration of investment philosophies. It's a manual to navigating the seas of market gyrations with poise and acumen. Each philosophy is a distinct lens through which the world of investing reveals itself in a new hue and texture. Remember, investment is both a pragmatic pursuit and a philosophical journey, one where monetary gain and personal growth waltz together to the tune of market fluctuations. And so, noble patrons of the investment arts, let us embark upon this voyage with a compass of knowledge and a sextant of wit, charting courses not merely toward financial prosperity, but towards being seasoned voyagers in the ever expanding ocean of investment philosophy. Thank you for your gracious attention. May your portfolios burgeon, and may the odds be ever in your favor. Good night and good investing.